My name is Carrie Love, and I'm a student at Los Angeles Pacific University, and I will be discussing the financial environment at Scripps College, which is located in Claremont, California. A brief introduction to the industry and its competitive and financial environment. Scripps College is a private liberal arts institution located in Claremont, California. It offers a single-sex education to female students. It was founded in 1926. It serves approximately 1,059 undergraduate students. Scripps as an institution is regularly audited by an outside agency, and its financial reports are public information. Scripps College, as of 2017, had an enrollment of 989 women. Scripps accepts roughly 33.4% of its applicants, and as a result, it is ranked as one of the most selective women's colleges in the United States. Tuition at Scripps for undergraduate students for the current academic year of 2018 is approximately $52,966. While Scripps is currently ranked in the top 30 schools nationwide for its academics, it is also ranked as being one of the most expensive colleges. Scripps College does employ an outside auditor to review its financial reports annually. The financial statements of Scripps College consist of statements confirming the financial position of the university. Also included in this report are statements of activity and cash flow. The auditor also includes notes related to these financial statements and the many different items that are located within them. Scripps College isn't a healthy financial place. They saw an operating budget of $13,042,269 in 2017. The operating budget shows the company's expenses, the expected costs, as well as the estimated income. It looks at the quarterly performance as well as how the institution does annually. In the case of Scripps, this amount that was reviewed by the auditor was done annually. The total net assets for the company also increased. The net assets of the company refer to the company's value minus its liabilities. Basically, the equation for that is total assets minus total liabilities equals net assets. Scripps has very high net asset values, which translates into the success of this organization. Its high asset value means it's doing quite well. Basically, Scripps College has high value. Scripps also notes that they brought in more money from the previous year in tuition dollar. This shows an increase in tuition dollar, but at the same time, it continues to show a growing student body. While Scripps still manages to maintain an overall small student population, they are able to increase tuition each year, although it might be small increases, and they are still able to grow their student body. This shows that even though tuition increases, it does not deter student growth or retention. Gifts to the university increased. In 2017, the university saw an increase of $2,295,186 from the previous year. Individual donors are giving quite a bit of money to Scripps, and the increase in contribution bodes really well for the university. Giving to the university is also attributed to various foundations and other organizations. Often giving of this kind is tied to how well the stock market is doing. So while the stock market saw increases in 2017, that ties in to some of the donor giving. When foundations and corporations give money, this is usually based upon how well the market is doing. So the stronger the market, the higher the personal giving, and that's often the case. And I believe it was the case here with Scripps College. Although that aside, Scripps continues to see increases in these monetary donations from one year to the next. The college's accounts receivables also went down. This also shows healthy company finances. The lower the accounts receivable means that the college is collecting owed revenue. When these figures go down, then these amounts become a source of cash, and it will be reflected on the cash flow statement. When this happens, it also increases the college's working capital. Additionally, notes receivable in 2016 were $4,231,233, and in 2017 they were $3,841,710. Notes receivable shows on the balance sheet as an asset. The difference being, notes include debts that have a promissory note attached to them. These notes can be paid back over a longer period of time if necessary, but for the college it indicates that these debts are being paid sooner. The endowment assets also grew for Scripps in 2017 by more than $740,029,000. This is significant as it shows an additional asset, but one that will continue to grow over time. Endowments are really crucial to the college as they allow for the implementation of certain programs or specific operations that have been dictated by the donor. This figure shows that endowments are growing. Scripps does not use this money to fund anything that would have to do with the daily operations of the university. More often than not, the endowment is untouched and it's allowed to grow, which only provides more assets to the college as the endowment increases over time. So essentially, the interest that is earned from the endowments is used to help implement different programs at the college and various scholarship funds. The growth of the endowment assets continues to show the financial strength of the college. As the Budget Committee reviews the budget, it takes into consideration all things as it works towards its strategic goals and long-range plan, and remains committed to controlling costs while maintaining high standards of quality. The decisions made follow the budgetary plan items. Decisions are driven primarily from the board level, with input from the Finance Committee and the senior team. These decisions follow growth prediction for the incoming class. This growth prediction is based upon the applicants that applied and were admitted the previous year, and from these numbers they are able to determine the possibility of what figures they will be looking at year to year in terms of applicant status. The budget plans for many things, such as implementing new initiatives and expanding funding in certain areas. A great example of this is the $400,000 that was given to financial aid. This enhances their services and how they can better serve their students. With this money, they are able to offer additional aid to marginalized students or underserved students or students that are classified as in need. It serves as a living, changing instrument, the budget, and it takes into consideration the wants and needs of the college. The budget reports show really where the college stands financially. The regular reporting, both quarterly and monthly, is a way for a manager to accurately check the spending amongst the various departments at the university. Tracking the spending is helpful in meeting the budget goals the college has set in place. There are goals set between departments, goals set for the institution as a whole, and all of this can be seen on the budget. It also addresses past spending as well as future spending. The budget report serves as a plan of action for the managers and a way to compare the various period ends. Now, what happens if a department has a significant variance from its budget? This can be problematic if it's not addressed right away. Reevaluation of overall expenditures for any minor adjustments from one department or project to another are going to happen. Key variances are likely to come from inaccurate forecasting, which is probably based around tuition costs, student retention, and unrelated capital expenditures. An example of an unrelated capital expenditure could be a catastrophic incident. In this case, however, the college is adequately insured for most scenarios through a variety of insurance modalities. So what does a new manager need to know? In regards to the budgeting at Scripps College, a new manager will need to be aware of several key pieces of information, such as understanding that contributions from individual donors may not always be the same or consistent year to year. This is a rule that they should consider in the back of their minds at all times. And while Scripps does receive a great deal of donor funds, these could fluctuate at any time and for any reason. It's also important to consider the dependence on tuition as a revenue source and personnel and capital costs as expenditures. The manager should also have a knowledge of the increasing costs of operations. Operations include, but are not limited to, salaries and the benefits of personnel. The other thing that would be important to know would be the understanding of annual gifts versus endowment growth, especially at Scripps, because both of these things play significant roles in the college, although they're both very different. Planned gifts are contributions that are part of a process. The process includes the preparation to receive and utilize these gifts in a way that benefits both the donor and the college. Basically, the donor will donate money to the college and specify what he or she would like it used for, and the college works very hard to make that happen. Now, the endowment supports initiatives, and these aren't on any timeline, but in perpetuity. Keeping in mind a portion of the endowment's value is in fact used annually. That is often how Scripps is able to implement new initiatives, develop new programs, and offer certain scholarships to students. However, how this money is used does depend on the board and or the donor. The donor may specify how the endowment is to be used, and a good manager must be conscientious of that. If the manager has a good understanding of all these things and knows what to look for and how to analyze them, they will be better prepared to navigate the budget process. These items are specific to Scripps, whereas the new manager is probably familiar with the items that would normally be contained in a budget. A true understanding of all of this will help the manager at Scripps be more effective and efficient. The review of the financial reporting at Scripps College has shown that the school is quite stable. I reviewed the audit reports from the last couple years, and there were no significant findings in any audit. Previous years look similar, however, each year shows growth financially. The college generates a lot of money, and I do believe this is a result of the way Scripps operates and manages its finances. The college continues to see revenue, which places it in a very healthy and financially stable place. Overall, Scripps College is handling its money quite well, and the programs it's offering and the students it's serving are proof of this.